Euro dollar. So the euro seen a nice little correction to the upside after stalling out at 108.09, and the market potentially could see additional upside over the coming sessions, although any gains are still classified as corrective with the market locked within a more well-defined downtrend. At this point, look for a lower top to carve out somewhere ahead of the 112 area in favor of the next downside extension back below 108.09 and towards the multi-year low from March at 104.62 further down. At this point, really only a break back above 12.15, 12.16, the high from the 10th of July, would take the immediate pressure off the downside. Sterling dollar. So cable looks like it's in the process of carving out a higher low ahead of what could be the next major upside extension back towards that 2015 peak that we saw several days back at 159.30 on the 18th of June. At this point, only a break back below the recent low that we saw at 153.50 would compromise the current bullish outlook. Dollar yen. So dollar yen could be in the process of carving out a lower top after stalling out ahead of 124.50, with the market potentially poised for deeper setbacks back down towards the recent lows that we saw going back to the 8th of July, which come in at 121.30. At this point, only a close back above 124.50 would put the pressure back on the top side. Euro Swiss. So a key break for Euro Swiss last week, with the market taking out some previous resistance in the form of the 4th of June high at 105.75, and this sets the stage for fresh upside extension back towards the February peak, which comes in at 108.15. At this point, any setbacks should be very well supported ahead of 104, while ultimately only back below 102.35 would compromise the recovery outlook for Euro Swiss. Aussie dollar. So Aussie looks like it could be in the process of potentially seeing some form of corrective upside over the coming sessions after the market had traded down to fresh multi-year lows at into the 7200s, 7260s, the latest low that we've seen. However, the daily studies are oversold, so this is why we could see a bit of a correction before the market looks to resume its downtrend. Ultimately, though, any rally should be very well capped ahead of the 76 area. Dollar CAD. So dollar CAD put in an interesting day on Friday, with the market potentially putting in a bearish reversal day, sort of like a gravestone doji close on Friday after we put in fresh multi-year highs just over 131, but then decided to close all the way back down by opening levels. This sets the stage for an overdue corrective pullback in this market after the daily RSI traded well into overbought territory up towards 80 and is now starting to pull back and look to normalize a little bit. Again, the uptrend remains firmly intact here, but there is risk for a few hundred points to the downside in favor of a higher low and bullish continuation. Kiwi dollar. So Kiwi remains locked within a well-defined downtrend, with the market trading just off its recent multi-year low at 64.98, but the market could still see deeper setbacks below the 6500 area down towards 60 over the medium term. Still, daily studies have recently been unwinding from oversold, and there is the possibility for a bit of a corrective bounce before we see a lower top and fresh downside, but ultimately any rally should be very well capped into the 68 area. SPX 500. So the S&P 500 had a major pullback last week after once again stalling out ahead of that critical record high from May at 2137. The topside failure suggests that this market could be putting in a more meaningful longer-term top, though we would need to see a break below the March low, which comes in at 2040, to confirm and accelerate declines. Gold. So gold still is under pressure after that severe drop that we saw to fresh multi-year lows last week in the 1070s, and at this point the market could be poised for deeper setbacks down towards the psychological barrier at 1000. Really, we would need to see a break back above the 1175 area to take the immediate pressure off the downside in the gold market.